Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 13th, 2019. In this video, I want to do a quick update on a few of the trade ideas, official and unofficial, that I've highlighted recently. We'll start out here with wheat, roll into coffee, since that's somewhat related, Treasury bonds, crude oil, natural gas, and I want to hit on the marijuana stocks real quick. All right, start out with wheat. Had a request for an update in the trading room, and then another member mentioned that the wheat had hit the suggested stop, or the stop price. Yes and no, it hit the stop price. The stop, well, no, it didn't. It's a move below 507, which means a close of 506 or lower. A stop is based on a daily close. Sometimes I will do that. If I don't specify otherwise, a stop is at a certain price or below a certain price. So a stop below any move below 507 would be a print of 506, or let's say a gap down to 501, opening gap. Whereas a stop on a daily close means you have to close at 506 or lower. And we hit a low of 507 today. So far, that one's still active. Now I want to talk a little bit about the trade and where it might be going from here. We'll start with the bad news. We'll do bad news, good news. Give you the bad news first. The bad news is we had a failed breakout recently. You know, the setup on wheat was nearly identical, very close to this one we had back here in May. We had an official trade on wheat, had a nice falling wedge confirmed with positive divergence. It broke out, never looked back, and in fact the trade parameter, this trade's still here. We went on like this, hit our first target, had a little reaction, pull back to back test it, hit our second target, ran up, hit our third and final target, and went out. And I had, final resistance level was up here, but I was being conservative because wheat futures won't always track perfectly to the commodity or the futures itself, or the wheat ETN, I should say, doesn't always track. So that one we, milked almost every cent of the run, following the buy signal, coming right off the lows to perfection. And this time around, as I showed you, it was based on a similar falling wedge. Now, what we didn't have at this time around was divergence, and that was okay with me as well. What I'm getting at is I have zero regrets. I would have done the same thing on this trade over and over, but I'm giving you the bad news first. So the bad news is a failed breakout. And here, let me go back to the chart. This is the current trade right here. I don't know where my price targets went. There they go, right here. So there's the price targets. Still an active trade. And now the reason, it's okay. First of all, divergence is not a absolute must with every trade, bullish or bearish. It just helps to confirm major trend change. This is positive divergence on a daily chart. And so what that does is it signals a likely impending trend change. So this breakout could have and still may be a trend change, meaning we had a downtrend coming into that low. A downtrend is simply defined as a security making a series of lower lows and lower highs. That is a textbook downtrend. Make no mistake about it. It's unarguable, unmistakable. And so far now it's not over. We don't know yet. It could be the beginnings of an early uptrend because we had an initial leg up, followed by a correction, which is still above those previous lows right now. So should we reverse soon, then we would have, especially if we take out this high right here, the previous reaction high, we'd have the early makings of a potentially new uptrend, primary uptrend in wheat. So that's that. So I'm giving you both the pros and cons. Now, what I really don't like about it is I do not like failed breakouts. They are pretty bearish. In fact, that was it. We had the breakout the other day, it triggered a long entry, and then yesterday, boom, big red candle. In fact, that was the biggest red candle we've had in quite a while. That's not good. And it also means a failed breakout. However, I'm going to get to the 60-minute charts now and show you, or the futures at least, because remember, wheat tracks ZW are wheat futures contracts. So here it is, ZW. And again, to do it all over, same setup, I would take it all day long. Some trades pan out, some don't. This one's still active as of now. Back here we had a divergent low, which was followed by this rally, nice tradable rally. Right here we had a divergent low, followed by that rally. That's the one I just showed you on the daily chart of the ETN, WEAT. Again, we're looking at ZW wheat futures here. So we've been able to milk most of that run. And again, once again, on the 60-minute chart here, even though we didn't have it on the daily, we did have, and I want to add, we had divergence. This is what basis right here. We had fallen to support at 471. That's a really good support. A lot of levels here, a lot of reactions. A reaction from above there, a reaction from below. In other words, you hit it, bounced off resistance, but then you regain that resistance, and then it becomes support. And we also tested it successfully here. Then, following that pullback to support with positive divergence, we broke out. So again, it's not working out now, but I'll take this trade all day long, over and over, set up like that. They just all don't pan out. And so far, like I said, that I gave you the good and bad of it. It looked good at the time, bad there. Now the good of it is we've fallen back to that 471 support, especially after a brief momentum fueled overshoot. That means we came down near vertically plunge yesterday, and that's fine. It's actually to be expected that you'll overshoot as long as we close there or stay above it, and we did. We closed at 472 and change. You can see right there. So just above it. So essentially, you have cross currents. You do have the failed breakout, which is not, that's certainly not a check mark for the bulls or for the bullish case. And but on the flip side, you have another successful so far test of support, pull back to support, and by doing so, we extended the existing divergences that were in place. They still have positive divergence. So now it's from this point to this point. So it's at a critical place. It needs to move up. If it doesn't, that stop wasn't arbitrary. If it goes much lower, it's going to take out the stop, and that's why I do a daily close. This is one example. You might wonder, Randy, it's kind of random. Sometimes you'll do a daily close. Let's get to know the securities. Some are whippy. I'll tell you, we've had some stop runs lately. The vast majority of the trades that have been posted played out. I'm going to get to MJ in a second, but sometimes, and it's this day and age, this market is just full of the algos. It's a constant game of cat and mouse. You got to adapt to the algos. They know where the stops are placed. So then I try to think, okay, well, if I was an algo, where would I, back in the day when technical analysis, before the computers came in, the algos trying to figure out, you had the market makers who would sometimes try to run your stop, but you'd say, okay, I'm going to go long here, 471, so I want my stop a little bit below if that breaks. So then they know that, and then they come in and clear your stop. So now it's a matter of, how far do you want to go and let your stop? You just kind of have to read it. And either way, they didn't get us yet, not on the wheat trade. But again, that's where they're going to get a lot of stops from those that are long wheat futures, and then it'll pull the ETN down if we go much lower. So there it is. Good and bad, the bad being the failure. The good is, hey, we're still back to support. We still have bullish divergence. And then finally, from a fundamental perspective, I mentioned this in today's closing wrap video. Kara85, member Kara85 posted this in the trading room. And it's what I've talked about in recent videos where Trump is, you can set your watch to his predictability. When the stock market starts throwing a hissy fit, he'll come in and he backs off his tough talk with China. This is the trade war cycle chart. And it's just a vicious cycle that's going on. No progress. Administration gets tough. Market sells off, throws a fit, and then Washington backpedals, and then the market rallies, and that's what happened today. But at the end of the day, we're really not going anywhere. So, Randy, why are you bringing that up? You already brought it up in the stock. It's the driver for the rally in the market today. Well, because it's a tit-for-tat thing. If you notice, it's not just one-sided. Now that U.S. has cowed down, Trump has cowed down, pulled back delayed the tariffs that were set to go into effect on September 1st on a lot of products, and also removed a lot of other products from that list. So therefore, the ball is now in China's court. And so, as we've seen before, they'll probably reciprocate this week. The last thing that I remember them doing was just a couple weeks ago, where they put a ban on agricultural imports from the U.S. That was their retaliation to his last thing, the one that he just retracted. So here's where I'm going with this. It's, we don't know if and when that'll happen, but I can tell you, if you're in that trade and you want to give it a little more room in case it doesn't happen tomorrow, I think there's a decent chance that China will come in and backpedal on their plans to halt U.S. agricultural imports, and therefore it should help wheat. Or could help wheat. So you could get a nice rally if that happens. So there's a fundamental reason. It's up to you if you want to extend your stop or not. But as of now, I don't see enough to modify the trading plan. Meaning either way, I'm not going to lower the stop, or change the price targets. I'll just sit tight on that one. All right, next one up on a related note would be coffee. Coffee futures trade under the symbol KC. Okay, KC I've highlighted recently as having some potential. We've had some trades on this one early in the year, and it trades well. These futures trade well to the technicals, as does anything. Give me a chart, look for a lot of certain signs. There was a breakout of that downtrend line, which even went to the left of the chart. That was a catalyst for not just this initial leg up, but for that whole ABC move right there. But even within there, and this is a day trader's dream right here. These swings in coffee, and we're only looking at a 6-month chart. These are 2-hour candles. Even one single contract of coffee futures, and even if you only caught half of these trends, would have probably put thousands of dollars in your pocket. Just one contract. These are bigger these are pretty big moves in coffee, and especially the futures that are leveraged. And so you can see the technicals are just clean. This is not a random downtrend line. This is a falling wedge. It broke and it gave you that next leg up, and then you had a nice clean uptrend line. You also had negative divergence at the highs that said, hey, the trend's in jeopardy, and then you got your sell signal. Actually, it wasn't the big red candle. Your breakdown was there, so there was plenty of time to get in that one. You have to zoom in a little bit to see it. So where am I going with this? Well, these things usually tend to trade well to the technicals. Sometimes you get the breakdown like that, and what you had the next day, you had a back test, and even popped briefly within the wedge, but that 60-minute candle closed right there, and then boom, that was it. And then that was the start, or really the top was here, but that was the catalyst or the sell signal for this whole drop that's going on right now. So it's not an official trade. I think we were long here, if I recall, either officially or unofficially. I have so many trade ideas, I can't keep track of them all. I move on to the next one after I close one out. But there's the downtrend line, the two intersecting downtrend lines. I posted the breakout the other day, but just like wheat, there was a smackdown as well. But however, in coffee, we've come to backtest the trend lines right now, a successful backtest at that, and we've snapped back up to that 96.20 96.21 support level I talked about before. And just like wheat, this marginal new low simply extended the existing divergences. Coffee and wheat don't have a lot of overlap. Corn and wheat trade almost identical, because they're grown in the same climates. Farmers are growing corn are often growing wheat, or their next door neighbor is, and temperate climates versus tropical climates. But again, there's just been a pretty good correlation too between just most of these ag commodities, or at least the grains, and that one falls in that category, I believe. All right, so that's that. The potential's there. Not an official trade now. I want to see these charts firm up. And if you want to take a shot, if it comes back over 96.21, maybe position for some potential good news from China. You see, maybe you'll get a pop out of it. Coffee can move quick when it runs. If you don't trade futures, JO is the trading proxy for coffee. You can see here, these are other trades here on coffee. That was, I guess, our last one right here. Yeah, it was, and broke out here. Very clean downtrend line, by the way. JO, that's the symbol. Breakout, initial leg up. When it hit that, there was the first target. At that point, if you go back, check all these posts, I said I think we're going to keep going. Didn't recommend to take profits or get out. Go to the next target. But when that was hit, I said the odds of a pullback are good. Recycle back in at lower levels, which is what I did. Then we got the next leg up, and I said the same thing. Odds were very good for a pullback. I followed up after that third target was hit, just on the same day, saying, look, I'm probably going to pull back. Here's why. Showed you the technical case, and then sure enough, we did. So coffee's still off the lows, at least JO is here. Really quite a bigger pullback than you wanted to see to keep an uptrend intact. You wanted to ideally remain above this low here. So let's just say I'm lukewarm right now on these guys. But there's potential, and the big trends are like this, these big downtrend lines. That's where you catch this. So let's do something right now. Let's just add a different trend line, see how that looks. Come off the highs. And remember, the ETN won't do a perfect job because they're not showing all the trades that you get in the futures. And the ETN just invest into the futures. But I'm sharing this for those of you that prefer to trade ETNs. So that would look something like this. I think if we pop again, we'll come all the way up here to before the first resistance, reaction there, and then my previous targets. Little work to be done, but as I said, I wanted to point those out to you guys and do updates because I mentioned them recently. Next one up. Let's do TLT. TLT is interesting. TLT, I think, is interesting. Once again, I'll get to the ETF here. I want to start with the futures. So let's do that. Okay. First of all, there has been just a tremendous rally, one of the strongest rallies in years in Treasury bonds. Treasury bonds have been rallying for one of two reasons, and they will. Remember, bonds rise, bond prices rise when interest rates drop. So if you're trading TLT, that's a long-term Treasury bond ETF, which we'll get to in a second. It's the same exact thing as this. These are futures. CB are the 30-year long-term Treasury bond futures. So these are bond prices. And remember, bonds go, the prices are inverse to the rates. When interest rates fall, the price of a bond goes up and vice versa. It's a one-to-one, it's a direct correlation. There are two main reasons that long-term rates will fall and bonds will rally. Number one is future growth expectations in the economy, as well as inflation or interest rates. Those go hand in hand. When future growth expectations for the economy falls, the future expectation for interest rates. In other words, people expect them to go lower because slow, stagnant growth leads to low rates. The Fed cuts rates to spur growth. There's not the demand. Strong economies usually are accompanied with inflation, rising interest rates. So that's one thing that's been prompting this rally, and that's clearly what the Fed has told you why they've cut rates for the first time in years. Is they see slowing growth, they're worried about it, they expect more, and they expect to continue to cut rates. So therefore, bonds have been rallying. So you have that, and the other thing is the flight to safety bid I talk about all the time. There's been a tremendous amount. The drop in Treasury bond yields is so big that one would have a hard time arguing there's not also a big flight to safety bid, meaning investors, especially smart money, institutional investors, mutual funds, pension plans, they will move money from stocks into treasuries when they are worried about the stock market being at risk for a drop. So where am I going with this? First and foremost, there's a clear technical setup. Everything I just told you a second ago was called fundamental analysis. That's nothing to do with technical. This is technical analysis, charting. And so what I see at this point in time is I see a pretty clean up trend line, and I see very clear confirmed negative divergence. We've just put in a lower low on the PPO down there, bearish crossover. So you have what I call a trade setup, not an actionable trade, a bearish trade setup for a short on Treasury bonds or Treasury bond futures. My target, just real quick, would be somewhere in this to the top of this recent sideways trading range. You have some reaction highs there. That would be actually my preferred swing target zone, with a first target around here, the bottom of that recent consolidation. Again, if that triggers. Now, I would view this setup as a hedge, if you will, to an equity short position. Why? Okay, so I already spent a lot of time today on the equity markets charts. So if I'm wrong, I think we're going to go down. I think today's pop will be faded, but I also may be proven wrong. And if I'm wrong, what's going to happen? The stock market's going to rally, which should then pull out the flight to safety bid out of treasuries, right? Normally, and that would push treasuries down, all other things being equal. It will also then invigorate a little bit the future expectations for economic growth. It's going to, I promise you this, if the stock market continues to rally from here strong, it's going to drop the chance of a next Fed rate cut. It might not eliminate it, but it'll drop it. And it'll also drop the future rate expectations, and maybe perk up economic forecasts a little bit. So therefore, if you a paired trade right now being, if a sell signal triggers here, short treasuries and short the equity markets. If the equity markets continue to rally, then all other things being equal, there are no guarantees, will probably then profit on the drop in the treasury bonds on that short. TBT is one option there. One other little point to mention here, a member of the site asked today about divergences and what they mean on different time frames. I think the question was, what's more important, shorter? Does it matter if it's a short-term time frame, a 15-minute chart daily? And my answer was twofold. There's two things you want to look at. Typically, number one, on any time frame you're looking at, regardless of what time frame it is, The smaller the divergence, the smaller the drop. Back here a few weeks ago, I had pointed out at this point right here into that high, we had negative small divergence. It was really, here, I didn't do it exactly there. That trend line is a little overlapping, but I want to point that out. From this point right here down to here, you can see the RSI and the PPO making lower highs. And right here, prices making higher highs. And what you had at that point was the biggest correction that we've had for a while in Treasury bonds. So the divergences did work. They did play out for correction. Small divergence, small drop. But from there, we continued to push up. There was a little blip. We've made a new high. And so the divergence from that same point, the same starting point, has now extended. So we now have larger divergence, which would indicate, again, there is no set formula. If you're wondering, well, okay, can I calculate based on that? No. But it just tells you to expect a larger drop, which would be more in line with this target here, if these divergences do play out. They don't always play out. You want a good example? Well, here's a big, large divergence. It wasn't as steep right now, but it was, we were diverging, and it did play out for correction, but it wasn't very big. So again, there's nothing 100%, and this might have been, a little divergent high. Actually, that did play out. I would draw it like that. That was the divergence. That line wasn't complete. And you did get a quick drop. But the trend was pretty strong, and you had this big run up here. So that's that. That's a takeaway. And then, other than that, the divergences are also commensurate to the time frame. For example, if I'm trading a pattern on a 5-minute chart, whether it's positive, which is bullish, or negative, which is bearish divergence, that would indicate a trend reversal that would probably last in a trade that would last either something measured in hours, no more than days on a 5-minute chart, maybe a couple days, maybe a few hours, in and out day trade. Whereas if you go out to a 60-minute chart, like we're looking at here, that usually indicates a trend that would last days to weeks. And then when you flip out to a daily chart, if you have divergence there on a daily chart, here's the TLT 60-minute chart, by the way. Same wedge. I just want to show you guys. Same wedge, TLT folks, same targets. Somebody asked me to call out the levels in the videos because they watch them on cell phones. I didn't realize that. If you're looking at a mobile, that would be about, and I'm just ballparking here, about dropped about 134 on TLT. Somewhere in that range, could be higher, more or less. This was a trading range, and the first target would be there about 138, the bottom of that recent trading range. So again, if a sell signal is triggered, meaning a break of the trend lines on, especially on the futures, first target there, second target there. I get the question all the time, well, can you give it to me on TBT? Some ETFs and sectors, I should say indexes, have numerous inverse, leveraged, non-leveraged ETFs. I can't run, charts on all of them. If I have time, I'll be glad to look at one and try to correlate targets. Here's TBT. I guess these are targets I had on here from before. I didn't even update this for a while, but they're the same targets right now. And that would be on TBT. Here it is. Let's take this line. There's your wedge. There's your bullish falling wedge. Maybe we'll even make this an official trade, just again kind of hedge up our shorts. First target here is around here, forget the numbers there, about 2650, and then let's call this a second target zone if that plays out. So again, you want to see a breakout there, and there's your targets for TBT, which is the 2-time inverse. So that's about a 6% run if the first target's hit. And I think we'd probably push all the way up to about here, which would be about a 14.5% rally up to that 2850-ish level. So there's a trade idea, and again, no guarantees, but if the stock market continues to rally, would certainly help the case for this trade to play out. I have seen times, and it is very possible, where if the stock market could drop from here, and treasuries could drop as well, because there's a lot of hot air. So I just want to say it's not a one-to-one hedge trade. One-to-one hedge is if you own Apple, you're long Apple stock and you buy puts on Apple, or I'm sorry, you buy puts. That is a direct hedge, because if Apple drops, your puts are going to go up in value. This is what I call an indirect hedge, where ideally it should play out and help hedge you. Could go the other way, where you could lose on both, but chances are there's a better chance that they would both play out before that would happen, in my opinion. So just pass along trade ideas for you. Okay, a few more to go. We'll look at crude. I'll touch on natural gas maybe real quick. Crude's a little better trading vehicle lately. Yesterday I posted this. I cannot recall if it was in the trading room on the front page or in a video. About 9:24, a little before the market opened yesterday. Their date and time stamp down here. Bullish setup on crude. I had crude falling down to a pretty nice support around $51, 50.11. Tag, a little brief momentum fueled overshoot, which again is more than fine. In fact, I prefer it because that gives you a bear trap. It clears out the stops that were too close, burns those, and then some might jump in and short, and then you get a reversal. So that was bullish event number one. Bullish item number two was we had bullish or positive divergence there, just like we did right here, which led to that rally. We had right here, which led to this whole thing. And just like we had negative divergence at the high. So check mark 1, positive divergence at the lows, check mark 2, if you will, the fake out. And then finally, like I say, you can either, when you go long, you can either buy pullback to support or breakout above resistance. So your final sell signal was buy signal was a breakout of this price channel, or more importantly, the downtrend line right there. And the fact it was impulsive. So move up, hit that first target or second target I had the first target here, 53.69, hit 54.77, pulled back to that first target support, went up here, was consolidating. We were at 54.79 there. I said the next pop above 54.80 should do the trick, take us up here. Breaks mean, a likely or potential reaction at each of those levels. Max bounce target 54.30. That was yesterday morning. Let's go to today. This was in the trading room earlier today, posted here at, you can see it down here, 12:54 p.m. So right after, about an hour after lunchtime, I mentioned, and there was some commentary added with this post, I said I've added a target level, a resistance level. CL crude futures has run into a potential downtrend line. I said potential because it was only the third tag of that level. We hadn't yet had a reaction. We have since, so now it's a valid trend line. I said a pullback is likely. I said you can do one of two things. Those bullish think, still targeting this level or more. Maybe it goes up here. At the very least, tighten stops to protect profits in case we pull back from here, and then let it run. You let your winners run, and lock in gains. I said, or, what my preference is, reverse off that level. Reverse means you close out the long position from wherever you took it, here, and immediately turn around and short it. Interactive brokers is unique. Other brokers might allow this, but if you're long, say, 3 CL contracts, and you want to reverse it and go short, you just enter an order to sell 6 CL. You don't have to say sell short, you just say sell. They're smart enough to figure out that if you're long 3 and then you turn around and sell 6, you're going to be short 3 at that point. And the benefit is it's one trade, one commission at one price, versus 2 separate trades which take longer to enter, and you have twice the commissions. So there's that. So that's what a reversal would be. And just for a pullback trade, there's a trend line here that if it breaks it could be more, but I think that's pretty much an objective target. That was today at 1 o'clock. It's pulled back a little, not much. Let me give you an updated chart. Actually a little better now. So there's, from the point where it hit that trend line, that's a 1.56% drop. That's easily, I don't know, it's got to be a couple $1,000s minimum per contract right there, at least over 1,000. So that's a quick trade, for each CL contract. I said I was going to post it in the swing trading group because I had posted as a swing trade idea, but that would also been a day trade fade, when that was posted. So reversed right on cue, and that gives us that third reaction for that trend line. So probably a little more downside in crude. If it powers back up, takes out the trend line, of course, that's still the next target. But at this point, the risk reward is not very favorable. And you take it back here, shooting for 58.30, great. You're getting that close to what I believe would be the max bounce target. I'd be more interested in just, maybe just riding a short down from here. That might be the end of the run since we hit that downtrend line. Here's USO for those of you that don't trade futures. Although, the futures, again, trade almost around the clock. You're going to see things you won't see in the ETFs. But there it is, same story. You have pretty much here. I was a little sloppy on that draw. You have that same downtrend line right there. Let's tighten it up a little right on that reaction high where I had it, that correlates that CL, and that is literally like almost a perfect tag coming right off that trend line. Again, you have to zoom in on these charts if you want to tighten it up. And it doesn't matter. You had a lot of upside momentum. You could have overshot that trend line by a bit, but it stopped it cold so far. Futures have drifted down the after hours, so you don't see as big a pullback. So that's that if you're a CR USO trader. And again, DWT, you can replicate all these trend lines, whatever. There's tons of ETNs, different ones to short crude. Nat gas, I'll just touch on it briefly. Crude's been the more tradable vehicle lately. That's NQ. Where's my NG? I've got a ton of charts down here. Here's NG. Nat gas did have a bullish setup. I did mention it the other day a couple times in the last week or so. We had bullish divergence here, here. In fact, we've had it 3 times. There, there, there. And this is another example. Well, this was not a great example because we had a small divergent low here, but I mentioned that as a setup back at the time for this trade. We were able to catch that. I got posted it right before the breakout there. Big run up, hit that final target there, wherever it was, and reversed. And even then I said, reversing that trade, you had negative divergence at the high. That was a great example. And again, that was posted, I think, in the trading room. I don't think it would have been an active trade. I don't think I posted on the front page. But so where it's come from there, here's what I wanted to update. It put in another divergent low, and it's been working its way up within this price channel. So the trade lately has been this, and could continue to be. You go long at the bottom of the channel, sell or go short at the top of the channel, wash, rinse, repeat. Although you're pushing against some resistance, it could pop up here and go. I'm not crazy about it, so I'm going to move on. I just wanted to point out those levels for you. You can see some overhead targets or that trading range, the price channel that it's in now, if you want to trade that for as long as it lasts. Sometimes those channels last for a while, like this one right here. Sometimes by the time you recognize there's a price channel, that's right when it stops working. But again, trading 101. If you're going to go, let's say, short the top of the channel, you short it with a stop just above. If you're going to go long on the bottom of the channel, you go long with a stop just below. So when it does stop working, your losses are minimal. And then just get up and move on to the next one. Finally, MJ, I believe I made it clear at the time this was an official trade. I bought it at what I thought to be good resistance around 28, a little above. I waited till about the 28.09 level. Stop was at 27.30. This is what I was talking about today. The algos, sometimes they get you. I thought it was a well-placed stop. This, if I would have been a little bit wider, we hit it that one day, popped through it, and since then we've been moving up. So I just wanted to revisit this one because for the same reasons that I liked it before. Now that it really needs to pop this downtrend line, that would be a more powerful signal. As I said, there's 2 ways. You either go long at support, which again, MJ, if I'm kind of going through this stuff too fast, guys, or if you're new to the site, that's the alternative harvest ETS. It's the first to market marijuana ETF. There's some others that have been popping up lately, but this is first to market, so that's one that I like to watch. And there's the downtrend line. That would be a more powerful buy signal. We had almost divergence. It wasn't clean because we made slightly lower lows here. But then again, we did that right here. That's what I called an ADL. And I treat every security different. I'm not a mechanical trader. They do this. They do that, what I call ADL, almost divergent low, because we had very steep drop, much lower lows in prices, and almost equal lows in the MACD and RSI, and it did the trick to give us this rally that ended with this divergent high. So there's my trading style: wash, rinse, repeat. Divergent high, almost divergent high. Why? Because we had this little pop here, almost an equal high, not exactly, so not technically speaking, but again, pointed out the time, ADH, almost divergent high. And that's it. Wash, rinse, repeat. Short the divergent highs, go long off the divergent low, and the buy signals, of course. There's your buy signal. If you can either go long, there wasn't support there, so in that case you had to wait for the buy signal, go long. And if you want to capture the whole trend, and if sometimes you get them, sometimes you don't, you wait for the divergent high. And sell signal, in this case, it came on that break below that consolidation. We had a back test. There was your second opportunity to short. First subjective shorting op was there. Second was on the back test of that resistance. And you capture that trend. Almost divergent low. I was showing you we had divergence going in there. What happened is the reason that turned out to be, the divergence made the indicators a slightly lower low. You had a selling climax. That's what a selling climax looks like, when everyone just kind of pukes up the shares of their pot stocks, give up, they're throwing the towel, and it brings in a whole new subset of buyers, and that's what's happened. So that's it. These are the trends. This is swing trading. And right now we don't have any strong buy signals, but we do have that ADL almost divergent low right there, and there's your buy signal could come on an impulsive break or breakout above that level. So I just wanted to point that one out. And I'll wrap it up here. Long video, but again, I want to get some alternative trade ideas out there. And I say this all the time, but I believe it is very, very important. You know, if you're having a tough time swing trading the stock market of all things is the most difficult to trade because it is a compilation of thousands of different stocks in dozens or even hundreds of different industries and subsectors, sub-industries. At any point in time, some going up, some going down. So when you go down to trading individual stocks or sectors, sometimes you'll have cleaner charts, cleaner trends like this to trade. And so therefore, this whole video was covering Treasury bonds, which are one completely separate bonds or one asset class, commodities, and within commodities we covered natural gas, crude oil, wheat, and what was the other one? Coffee. So there's break that commodity piece of the pie down there, and sometimes one of those is going up and the other's coming down. And then cannabis stocks, which have nothing to do. Most of these are not in the S&P 500 or Nasdaq 100. So there's another instrument that could go down. You could have the stock market start to drop, and then all of a sudden these guys rally. So that's all about spreading it around. So we'll wrap it up here and pick it up tomorrow. Let's see what the futures do overnight and how we close the day tomorrow in the stock market. I'll be very interested to see. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.